You're watching today's Daily Market Comment by Raf Boyajian. I'm Christina Marujos, and thank you for joining us here at XM.com. Government bond yields in Europe and the United States scaled new heights this week as investors were once again caught off guard by fresh evidence of persisting inflationary pressures. Most prominently, the U.S. benchmark 10-year yield crossed above the 4% threshold on Thursday for the first time since November last year, and the 30-year Treasury yield did the same. Both were off their highs on Friday, and Eurozone yields fell slightly too, having surged all week. This latest round of sell-off comes on the back of last week's hot PCE inflation numbers and Wednesday's uptick in the ISM manufacturing PMI's prices paid component. Euro area inflation also surprised to the upside, fueling over-tightening fears. Subsequently, there are some jitters ahead of the ISM non-manufacturing PMI due out of the United States at 3 o'clock GMT. Policymakers seem to be keeping their options open, ready to lift rates higher than the current projections if needed, but at the same time wanting to wait until the summer first to see what impact the existing tightening will have on inflation and growth. This was the main takeaway from the latest remarks from Fed policymakers Raphael Bostic and Christopher Waller. But as bond markets took note of the upside risks to the Fed's rate path, equity traders opted to focus on the fact that policymakers will stay the course with another 2 or 3 25 basis points rate increases and then pause. Shares on Wall Street staged a surprise rebound on Thursday, with the S&P 500 adding 0.76% to notch up weekly gains. In the currency markets, the US dollar pulled back in line with the moves in Treasury yields. Interestingly, the greenback is on track to finish the week with losses despite the symbolic gains in yields. The Japanese yen also had an unimpressive week amid ongoing uncertainty about how soon the Bank of Japan will abandon its yield curve control policy. The euro is edging higher on Friday as it continues to be shored up by increasing bets that the European Central Bank will hike rates to 4%, a level that Belgium's central bank chief Pierre Wunsch did not rule out in comments today. Thank you for watching today's Daily Market Comment here at XM.com.